economic development issue that we addressed in the paper is the effects of tax increment financing, or TIF, on business entries and exits in Iowa. Iowa is a state with the highest number of TIF districts in the nation. And this study is important because at the end of the day, TIF is essentially an economic development tool to attract and retain businesses. However, previous studies focus only on either employment or number of businesses. Our study is first to examine the effects of TIF on not only changes in the number of business establishments, but also on business entries and exits. So here's what we did for our paper. As for data, we obtained the boundary files of TIF districts from Polk and Choi counties during the 28-year period between 1990 and 2017. These two counties are among the most populous counties with the heaviest use of TIF in Iowa. For business data, we employ sales and use tax permits from the Iowa State Department of Revenue. The data provides a comprehensive list of all business establishments that have a physical presence in Iowa and are required to collect sales and use taxes on tangible and digital products as well as services. In terms of empirical strategies, we focus on 3 economic development outcomes, namely business establishments, entries, and exits. We estimate the effects of TIF using event study designs by comparing the 3 outcomes in census blocks that overlap TIF districts and those blocks that do not. The estimations were done for both counties together, each county separately, and by industry. In addition, we estimate the spillover effects of TIF in blocks that are either partially overlap TIF districts or are immediately adjacent to blocks that either completely or partially overlap TIF districts. I can have 4 key takeaways. First, looking at both counties together, we find TIF did not significantly affect the total number of establishments, but it did lead to fewer exits or closures. This pattern held true even when we analyzed the data using different methods and compared the results to different control groups. Second, the effects of TIF differed by 2 counties. In Johnson County, areas overlapping completely with TIF districts saw an increase in the total number of businesses. Additionally, reductions in business closures were primarily observed in Polk County. Third, retail trade appeared to benefit the most from TIF, while manufacturing, an industry with a higher job multiplier, did not see any significant effect. We found little evidence that TIF benefits spread to nearby areas. This finding suggests that the TIF impact may be concentrated within the designated areas. As for policy recommendations, I have several published and ongoing studies on TIF. Most of my research on TIF in Iowa, including this study, consistently shows positive impacts, though modest, on property value, and in this study, particularly business growth and retention. Interestingly, unlike some other states, Iowa doesn't require plight identification or a but-for test as conditions to establish TIF districts. This means that areas benefiting from TIF may not be needing the money from TIF. In my view, the lack of these 2 conditions could be limiting the effectiveness of TIF. If TIF were targeted specifically at blighted areas or areas that would not see development without TIF money, the positive effects we are seeing could potentially be even stronger. I would encourage Iowa policymakers to consider these stricter conditions for future TIF implementation in the state.